let's get talking to one company which is the top gain on the Nifty today, IDFC. We have with us Mr. Vikram Limaye, the MD and CEO of IDFC, joining in. Hi, Mr. Limaye. Thank you very much for taking the time out. First, I'll start with the question on demerger. Could you give us a sense in terms of the demerger scheme that was announced by IDFC? Could you take us through what the demerger process will look like and by when will it be completed?
So as I've said before, the bank is expected to get operationalized by October 1, 2015. And the demerger process, which is a court process, is expected to take anywhere from 6 to 9 months. We expect to file the scheme of arrangement with the courts in January so that we're in good shape to get all the approvals in place before we operationalize in October. There are obviously a lot of other approvals that are required from all the regulators, including SEBI, RBI, etc. And then the final license is granted by RBI once you have the court process completed, approvals from various stakeholders, including creditors, all types of categories of bondholders, lenders, etc. Then the final license is given by RBI to commence banking operations. So we expect all of that to be completed from January to September so that we can operationalize the bank in October.
Afternoon, Mr. Limaye, and thanks so much for joining in. What will the structure of the company look like post the demerger now?
As we've said before, IDFC Limited, which is the listed entity today, would be the promoter of the bank. Per the bank regulations for new banks, the promoter of the bank has to set up the bank through a non-operating financial holding company. So under IDFC, we will have a 100% owned non-operating financial holding company. That non-operating financial holding company will need to own all the financially regulated businesses of IDFC. So the bank will be a subsidiary of the non-operating financial holding company. We expect the NOFHC to hold 53% of the bank. The balance 47% will be owned directly by shareholders of IDFC. So as we've said, for every share that a shareholder owns in IDFC, he or she will get one share in the bank. And the shareholding will therefore be, we expect 53% owned by the NOFHC, 47% owned directly by the shareholders. All the other businesses that we have, the asset management business, the alternatives business, investment banking, broking, and the IDF NBFC that we now have approval to set up, will also be subsidiaries of the NOFHC in parallel from a structure perspective alongside the bank, which is the way the banking regulations have been constructed. So that's what the structure will be. NOFHC will always be a 100% subsidiary of IDFC. The bank will also, I just want to repeat one more time, that the bank will be listed on day one. So once we operationalize the bank in October 2015, it will be a listed entity. So you will have IDFC Limited as a listed entity and IDFC Bank also as a listed entity.
Okay, Mr. Limaye, Mr. Limaye, just getting back to our conversation then, you said that this was the first part of the demerger that was announced in the press conference when I heard you briefly. Will the board then be approving any other steps in the coming weeks, months that we need to look out for, which will be a part of the demerger process?
No, I think, this now has to go through its regular process. As I said, it is a court-administered process. You have to get consents from various constituencies because you are demerging all the assets and liabilities from IDFC into the bank, right? So you have assets, liabilities, options, option holders, employees. There are various stakeholders, and the way it works is that through a court-administered process, every class of creditor, every type of stakeholder is actually met with and consents are obtained so that you have all the consents in place for all the assets and liabilities to get demerged into the bank. Once you have all that approved, then obviously you have the regulatory approvals and the court approval. Then there is no incremental approval that is required.
Okay, coming to your numbers now, the provisions were higher this quarter as well. What does your floating provision cover look like now?
See, it's not about this quarter. As we have been saying for a few quarters, we will continue to build provisions over the next 12 months as well till we operationalize the bank. for the simple reason that unless we see progress on the issues that we've been talking about surrounding infrastructure, particularly in the power sector, we would rather be provisioned against all known risks that we have before we become a bank, rather than end up in a situation where we have to create large provisions after becoming a bank. So it could well be the case that in the next 12 months, as we see the landscape evolve in terms of resolution or the lack thereof, we may decide to change our stance on what kind of provisioning we need to make. At this point in time, what I can tell you is that we will continue to build provisions. If things do get resolved, we obviously reserve the right to write back any provisions to the extent that we have created excess provisions. But the idea is to set aside enough capital so that the bank's balance sheet is bulletproof against all known risks.
Okay. Did your provisions this quarter specifically include anything emerging, from the impact of the Supreme Court verdict in the coal deallocated companies?
No, not really. I mean, it is part of the consolidated assessment of risk and the provisions that we want to build to, right? So like I said, it is not, over the last few quarters and over the next few quarters, we will keep building provisions to a level that we feel comfortable based on all the known risks that we know exist today.
Okay, Mr. Limaye, we're going to get our viewer query from our CEO segment. Gautam writes to us from Kolkata. He wants to know what is IDFC's exposure to the companies impacted by the coal block deallocation.
It's not a straightforward answer because there are various issues surrounding the coal block cancellation. There are a set of issues surrounding tariffs that are also being adjudicated in the courts. So it is a combination of various things in the power sector. One is fuel-related issues. The other is now just fuel-related issues in terms of the shortage of fuel and whether plants can actually get adequate fuel to fire at appropriate PLFs. Second has to do with now this cancellation of blocks, and the third has to do with tariff-related issues which are being negotiated with the courts. So it's more an aggregated picture rather than trying to disaggregate it. But obviously we do have exposure to some power plants that had captive mines that have got cancelled.
Will profits then continue to be pressured for the second half of this fiscal year due to higher provisions and higher operating costs, as the company transitions into a bank?
As we've said before as well, and if you look at our results last year as well, we've been more or less flat, despite really very little growth in the environment from an infrastructure perspective in terms of new projects. And obviously the assets that we are booking, if you look at, there have obviously been gross disbursements in the first half as well, are necessarily to low-risk assets, right? And so from that perspective, you will therefore see the spreads also coming down because we are not booking traditional project loans that would have had higher spreads. We are booking lower risk assets, whether they are operating assets or mature companies, corporate loans to mature companies, which are very high in terms of credit quality. So those necessarily come with lower spreads. So our hope is that we'll be able to remain flattish with last year, despite the environment we're in and despite the large provisions that we are creating.
Okay. Your loan book contracted around 4% this quarter as well, and that was in line with your consolidation strategy. But what will it look like at the end of FY15?
My hope is it will be more or less flat rather than contracting. But what that means is it still requires us to book incremental disbursements because there will be natural repayments of assets. There could be some prepayments of assets. But my hope is that we'll be able to end up flat or maybe marginally negative, but not materially negative.
Okay. Last quick question then, Mr. Limaye. Asset quality, the reason for the rise that we've seen in the restructured book this quarter on a sequential basis, as well as your guidance.
The rise in the restructured book has to do again with issues surrounding infrastructure not being sorted out on a timely basis. And the reality is that our hope is that whether it's coal-related issues or gas-related issues, there will be a solution that emerges because the size of the problem is very large the amount of capital that is blocked up, whether it's equity or debt, is very substantial. And so where we've had an opportunity to restructure, we have restructured because that is permissible within regulation. We've tried to do sensible restructurings to the extent possible, where we're trying to find a solution that is a long-term solution for a project, including obviously giving significant time till a solution emerges. And our hope is that there will be some resolution on these matters. I mean, if all these assets and everything were to become non-performing assets, then we have a fairly large problem to deal with from a systemic perspective. And I don't expect that to be the outcome. But to the extent that for assets where we haven't done a restructuring and a restructuring was feasible, we will obviously first do a restructuring and see how the environment evolves. Hopefully a solution will be found and these assets will be performing assets long term. If they don't, and for some reason there is no solution that is found, then some of these restructured assets will transition into NPAs. The timing of that has to do with things that are completely outside our control. And when a solution emerges and how long it takes for gas and coal is anyone's guess. We know that the government has been working on it quite aggressively. They're focused on finding a solution. Our hope is that a solution will be found in the foreseeable future.
Okay, Mr. Limaye, we'll leave it at that. Thanks so much for joining in. IDFC stock is up close to about 4.5%.